Welcome to Investors Insights, where today we're talking about regaining market momentum. Good morning, guys.
Morning, Bobby.
Greg is out meeting with clients this morning, so it's the three of us, and we've got a lot to cover. We've got a busy week. Last week we got some really good news on the jobs front, had a great jobs number. And then this week we're looking at corporate earnings. We're starting to kick off earnings season, which historically, looking back the past couple of months, earnings are looking really strong, and so we're looking to earnings to kind of reignite the momentum we've kind of lost the past couple of weeks because we've been in a little tight trading range, and so we're looking to earnings. But Trey, talk further about the great jobs number.
Yeah, we had a really good jobs number on Friday. The headline number was good at 220,000 jobs created. That's great, but really the most exciting number was kind of underneath the hood. The unemployment rate actually ticked up. Now, why is that good? That sounds bad. It's good is because that's an indicator that people are coming back to the labor force. When you have jobs being created and the unemployment rate ticks up, that shows confidence that people that were previously considered out of the labor force are coming back. And so you typically see that before you see a nice run up in jobs and a growth in GDP. So we're seeing people also skip from unemployed to employed. That was the highest level in several months. So these are all very good numbers kind of under the hood. We might be getting a little bit of excitement in the economy, some good hard data. Yeah. And also to back that up, something else interesting came out on Friday. I think everyone's noticed the gas prices are down at the pumps and that oil prices are down over 20%. We did a vlog on that a few weeks ago. But what was interesting is that historically when you see that, you see oil production come down. But the U.S. last week added 12 rigs. So we're not cutting production, which kind of shows that maybe these oil companies have really cut their costs down. And so we're still the swing producer. Prices are coming down. Oil prices at the pump are coming down. This is great, but it's not hurting the oil industry, which is phenomenal.
Yeah, and that's very important. And then this week also, the market will be watching Janet Yellen's testimony to Congress very closely. So Ashley, talk about that important piece.
That's right. She does it twice a year. This is a semi-annual address to Congress, Wednesday and Thursday, to parallel on Trey's comment about jobs. You know, our central bank looks at two things, inflation and unemployment. Not all central banks around the world do that, but ours has a dual mandate. So if you look at the momentum that we're talking about, we've created job creation in the next few months, to Trey's point, has really outpaced people wanting to come in, so that's good. That's called slack in the system. So we've tightened the slack in the system, and the econometrics of that look great. The interesting thing we were talking about this morning is what's been a little bit harder to get around, and she'll probably discuss that this week, is the inflation number. The inflation, despite the fact that the jobs are going up, usually inflation will follow that a little bit. It's not really doing that. And she will probably say Wednesday and Thursday that that's more transitory. However, when you look at that, our thought is perhaps you've got some things working technologically now that's new. You've got an aging population that's also new. And we were discussing this morning that maybe some of the modeling they need to start looking at on inflation needs to be tightened up a little bit, because that seems to be sort of the core of the debate. And our thought is that perhaps the modeling may need a relook.
Yeah, how long can it be transitory for?
Exactly.
Several years of low inflation. How is that transitory?
Correct.
And we'll be analyzing what she says very closely.
Absolutely. I mean, the target date on inflation is 2.5%. We hadn't really been there since the beginning of the financial crisis. So there's clearly something different in that.
Yeah. Well, thanks for watching. Please follow us on Facebook, Twitter, and LinkedIn. Please call us or email us anytime. We love to hear from you. Have a great week.